Hello, what's up guys, and thanks for tuning in again. Welcome to another weekly crypto market update. As always, I am here with Zero Cool. How are you?
Welcome. I'm pretty good. Yourself?
Yeah, it's fine. It's good. So today, of course, we're going to talk about the tariffs, the Trump tariffs, the Liberation Day. As well, we're going to go over some Bitcoin technical analysis with Zero Cool. And I think we're also going to do some Ethereum and Solana today.
Yep.
So yeah, let's dive right into it. So of course, like I said, the tariffs. Here you find all the tariffs from the Liberation Day, the reciprocal tariffs. Yeah, you can have a look at it yourself. It's 3-4 pages. But the most important thing, what I wanted to show is, so that Trump called them reciprocal tariffs, but it's actually reciprocal tariffs plus likely based on US trade deficits. So that's what we didn't expected, and that's why the tariff, that's why the market dropped, because everyone was just expecting reciprocal tariffs that he announced, but they are now a little bit higher than people expected because of the trade deficit that's counted in these tariffs. So a little bit higher than expected. But what I think it's important, because a lot of news channels, they don't paint the full picture on why Trump is doing this. And that's what I think is really important, that everyone understands why. And that's why I wrote a small article about it as well. And I want to go over that real quick. Another good image that we shared on our Discord was this. So this explained it in super short, what's why Trump is doing this and how the market will react. So like I said, the script is obvious. Get the 10-year yield down sub 3.5, refinance the debt. So I don't agree with this, because will probably be roll over the debt, initiate QE, and then roll back the tariffs, and yeah, then everything will go up in 2026, what he's saying. And I think this is exactly what Trump is trying to do. And the earlier he does this in when he's president, the better, because else he will have problems with the midterms. So maybe first, real quick, a small economic lesson on what the 10-year yield is, because I'm sure not everyone understands this perfectly. So basically, the 10-year yield is the US interest rate that the government pays to borrow money for 10 years. And basically, it's set in the bond market, and it's based on supply and demand. So when investors buy the 10-year yield, the price will go up, but the yield will go down. So what's happening is, so there are fears of recession. So people buy this 10-year yield, which makes the yield go down. And this is the game plan that Trump is trying to do, because he needs to refinance or roll over that massive debt. So he's trying to scare everyone into a recession. They buy the 10-year yield, the yield drops, he can refinance the debt with a low rate. I explained this also very short, so I'll show it right here. So there is a 9 trillion debt wall. So the US needs to refinance more than 9 trillion of his debt over the next 6 months, which is a lot. Like I said here, it's 25% of the US total debt. And it's mostly from the COVID emergency, where they printed a lot of money. I also think, so like I said before, they will just roll over it, not refinance it. And yeah, in short, he tries to maneuver the Fed as well. So, because if the Fed lowers its interest rates, the 10-year yield will go lower as well. So he maneuvers the Fed by causing a recession, and this is the important part, or convincing the market that one is around the corner. Because then they will buy into the 10-year yield, and then the yield will drop. If we go a little bit further, then Powell will just cut rates and QE and restart and QT restart QE. So yeah, you can. I'm not gonna go over all the way, but it's just like I said. Trump is doing this because he needs to finance that massive debt wall. If he will do it at these rates, he can. Of course, you can print more money, but that wouldn't solve the problem. And that's the thing. What I said at the end, what I think is good, is a politician who's not afraid for short-term pain for long-term prosperity. And that's really important. That's where I wanted to talk about. So it's super easy, and politicians do this all the time, to just kick the can a little bit further down the road. What I mean by that is it's super easy to just print more money, let the money printer go exponentially, and just print your way out of the problem. Politicians are doing that for the last 50 years, and this is why we're in the problem that America is right now, with this massive debt who's never going to be solved. And so that's, I think, is good for the US. And then you can start the discussion, because the problem is a lot of people want to have a discussion about tariffs without knowing the full picture and why the US is doing it.
Doing this. Also, you're saying for the US, it's a worldwide problem, right? The 50 years of printing and kicking the can down the road is pure causation of inflation.
Yep.
And it's just not the US who has this problem. Everybody has this problem. The US is just the biggest and has the biggest effect. And I agree, you need to have a change, or it will just endlessly cycle on forwards. And this pain that we're having now is the initiator of the change. And we're saying we're having pain, or I'm saying, oh, we're having pain. Bitcoin is not crashing while the stock market has a historical red day on Friday. Very interesting, but we'll go over that later.
Yeah, and so you talk about pain, which is really well. The thing is, and that's actually what I wanted to talk about afterwards. The only pain, who's feeling pain, are the rich people, because I was just watching this morning with my girlfriend the Scott Bessent interview with Tucker Carlson, and they talked about, I'm only halfway, I'm gonna watch the rest later, but the 10%, top 10% of Americans own 88% of equities. So all these tariffs left and right only affects the 10% richest American people, because this will benefit all the other percent. Like he said, the bottom 50% has debt. They don't even have a single dollar in their bank account. So this is what's crazy, and this is because of the years after year money printing of the Federal Reserve, and like you said, all the other central banks in the world. And this just creates this massive wealth gap between rich and poor, and someone had to stop it. And I think Trump is doing a good job for the American people, but of course the rest of the world will suffer a little bit, because if you look at the world globally, then of course tariffs are not good. It's better that you have free trade all over the world for the world economy to prosper. But that's another topic. And I think I even wrote it in my article that when the debt will be rolled over, that he will just roll back the tariffs. So we'll just pull back the tariffs, and that's what I'm thinking is going to happen. Of course, it's also not the only reason. He uses as well it's just a strategic pressure game. He uses it to be strong in negotiations with other countries, because that's also a thing which I don't really like from the mainstream media, that it seems like the US is the only country that's putting tariffs. But no, all the other countries around the world also put tariffs on each other, put tariffs on the US, so it's nothing new. So yeah, that's basically what I wanted to say about it. Oh yeah, I also searched about it. So like I said, this is a worldwide global problem, which basically affect your purchasing power. And you see this super easy. So because of all this money printing, because of all this debt generation, it's super hard for the American people and for all over the world in Europe to go by. So the lower class people having a really hard time. So I looked at the numbers for example, Belgium, because I'm from Belgium. At the moment, it costs 4 more times your purchasing power to buy a house than 50 years ago, which is a lot. So 50 years ago in Belgium, you could buy a house with 3 years your salary. So you can, with an average salary, an average house, it takes 3 years to buy a house in Belgium. Now,
50 years ago.
Now it's 4x that amount, which is crazy. It's at the moment, it takes 12 years of working, so 12-year salary to buy an average house. And the 12-year salary is just the salary. So if you don't spend it, which is crazy. So, and this is just what's happening. If the politicians are not going to do anything, this will also double or more in the coming years. So if Trump didn't do anything for the Americans, this would be that they only could afford a house after 100 years. So I think it's good that someone tries to do what's best for his people. But then, of course, as a European, you can say, oh, but it will hurt us. That's true. But I think a leader of your country needs to do what's best for your country, if that makes sense. I'm sure a lot of people would disagree, but that's how I view it.
I agree to an extent, and I think a lot of people would disagree because it's Trump. Let's say if it's England doing this and Her Majesty is doing this wild refinancing, the tariffs thing, that sure there would be uproar, but it wouldn't be to the extent that it is Donald Trump, because he has other stances that I personally very strongly disagree with, right? So, but financially, he is a business leader at heart, right? It's not the first time we see him make rash business decisions as a leader of a country. And I don't know, love it or hate it, I guess. There is no in between with this guy.
The thing what's remarkable is that Bitcoin, since Liberation Day, is up and the rest of the world is down, which is crazy to me. So finally, it's acting as a monetary hedge. Well, as a safe haven.
And everybody was like, oh, it's got to crash or we're going to short.
I'm really curious.
Yeah, amazing numbers, right? This is one for the history books. What transpired since Liberation Day, absolutely history worthy.
Okay, so let's move on. This was my thoughts on the tariffs, what's happening at the moment, why Trump is doing that, and what the effect will be. The only thing what I want to say about this is that, and I answered it as well on a comment on my post, that he doesn't need to overplay his cards, because that can be dangerous as well. You saw it just with China, because China put even more tariffs now on the US again. And if every country does that, then it will be a hard time.
That was a cause for the second leg down, by the way. Yeah. We had Bitcoin like showing strength, and then it nuked to the Monday's low range, and that was purely because China said, "Oh, we're going to do we're going to add more tariffs to what we already had." So. Yeah.
Okay, so moving on, as always, let's look at the global liquidity numbers. So global liquidity is still in an uptrend. So global liquidity rose by 507 billion last week. At the moment, global liquidity is sitting at 174.6 trillion US dollars. And this marks the 12th week of increases. And as we all know, global liquidity lags Bitcoin by 13 weeks. So it's finally getting there, and maybe this is the reason that Bitcoin is holding that support, because there is enough liquidity maybe in the system to support assets like Bitcoin. So we'll see about that in the coming weeks. I think this is good, but it's still not abundant yet. So there is still not enough liquidity. Why? The Fed is still not in QE. They only reduced their QT from 25 billion to 5 billion. So I think that's not enough. But maybe because of all these tariffs, because of the recession fears, they will lower the interest rates. They will start QE again. So that's a possibility. And that's what the guy here, what's his name, Larry, was saying as well, that recession fears, refinance the debt, then initiate QE, roll back the tariffs, and then golden bull run in 2026. That's a possibility. I don't say this will happen for sure 100%. Nobody really knows. So the thing with the tariffs is, and then I'm going to stop about tariffs, is that nobody really knows their effects. They have never been implemented on such a scale that it's really hard to know what's really gonna happen. The only thing which we know is that Trump did this in... So yeah, let's talk about a little bit of inflation, because that's also something where a lot of people are talking about, that because all the headlines are saying, yeah, inflation will be through the roof because of tariffs. But no, so the only thing that we know for sure is that Trump, because he implemented tariffs in 2018, 2019, and as you look at China, because he implemented 20% tariffs on China, just with the tariffs, there was only 0.7% inflation with 20% tariffs, which is super, super low. And I think this is what's going to happen as well. So I wrote it here a little bit in my article as well. So I don't think tariffs will cause long-term inflation. And the word long-term is important because, of course, I think in the short term, a little bit.
Yeah, makes sense.
But then the thing is, because the markets are free, it's based on supply and demand. So if demand drops off the cliff, yeah, the inflation will just stay flat, because that's the thing. Let's say cars. Okay, they put 20% tariffs on cars. Let's say the car manufacturers put the cars 20% higher. If nobody buys them, then they're just going to lower the prices again. Inflation to me is more based on monetary inflation, which just means that the expanding of money supply, let's say the money supply doubles, then we see double inflation. So it's just based on that, because then your currency devalues, and that's why we get the other asset prices higher, because your currency devalues because you expanded its money supply. It doesn't really work like that you just put the prices 20% higher and that all the people will follow and pay 20% higher. No, they will just not pay it. So demand will just drop off a cliff, and then there will be no inflation. We saw this in 2018 as well. Another thing is, and that's one of the big things, so the tariffs, they will improve the government's cash position, as well as the Doge from Elon Musk, which is trying to cut $1 trillion in spending. So the government will have more money, which will help as well the reduction of the taxes, which makes the purchasing power of the US citizens better, so which helps fight inflation as well. But also, if there is less government spending, this will keep a lid on monetary inflation, because then they have to print less money. They will have a lot more savings, so there will be less inflationary pressure. So these are all moving parts that go together. So you just cannot say, yeah, 20% tariffs equal 20% inflation. No, that's crazy. That doesn't work like that. It's free markets. It's based on supply and demand. So yeah, sure, on the short term, there will be a little bit of inflation, but I don't think there will be mega long-term effect on inflation. That's my point of view. But like I said, nobody really knows, because we haven't done this on such a large scale. The only example we have, and sorry for repeating myself, is in 2018-19 China, 20% tariffs, and so which resulted in 0.7% inflation.
Let's quickly touch up the point where you said it means that people have more savings and more money to spend, and that's where the crypto part comes in, because they can put that into crypto. We've seen that before when the printing press was turned on after COVID. A lot of those stimmy checks flew right into crypto, right? Yeah, altcoins went berserk.
That's a possibility.
That's why we're here. I know it's a lot of macro, and unfortunately, crypto right now is pure macro, right? It's growing as an asset class, and then it's playing by the macro rules. And if you want to play by the macro rules, you need to understand the micro, and that's what we're talking about now.
Yep. So let's move on with further inflation. So the numbers for today for true inflation went down again to 1.38%, which is crazy to me. So three categories are cooling: rented dwellings, owned dwellings, and other lodging. So I think it's basically housing that dropped then. Transport dropped as well. Yeah. So he doesn't say it, but as a reminder, everyone knows it who's watching. So true inflation leads the BLS report by 45 days. So I think based on this, inflation will be dropping. I saw a tweet as well from Powell, who said, yeah, I think he said that tariffs will cause inflation, but I think he's just saying that because he wants to, how can I say it? I'm searching for the words in English. I think he wants to make clear that he didn't make a mistake by not cutting interest rates already, because that's a good point for him, where he says, yeah, I'm leaving the interest rates up high, so because I know there's inflation coming for the tariffs. But I think that's just bogus.
Trump called him out yesterday, 20 minutes before Powell was speaking, that he said he was late for cutting a rate. Okay, this is just like, I don't want to call it 4D chess, because I do think people are giving Trump way too much credit. I don't think it's some genius strategic move. I think it's just pure dumb stubbornness that he's pushing through. But I like this tweet. Absurd. If you like take it from an outside perspective, it's madness. This.
Yeah, it's weird that
but it's madness.
they're fighting within their country themselves to pressure each other. but and I answered that, I think, to Chris in our Discord, because I think it was him that posted it. He's always late. Is correct. You saw it last 2 times. He was too late as well with raising interest rates. And that's because we saw this massive inflation. Because of that, we saw the blow of top in crypto, because he was just too late with raising interest rates. I hope he's not too late right now, because if he's too late with cutting interest rates, then we will go into a recession. And so, because a lot of people ask me, yeah, do you think we will go into recession or not? And it just depends on what Powell will do. Will he cut interest rates before something breaks or not? That's really the question everybody has to ask themselves. I don't think we will go into a recession, because we have all the tools we need to avoid it. US interest rates are still super high, so they can lower them enormously. They're still in QT, so they can just start QE again. And at the moment, there are so many people in the stock market, which we didn't have before when we saw recessions, that this will just prop the stock market up. And I don't think we will see these sharp drops that we're used to. So I don't think we should enter recession is maybe the answer, because of course we can go into recession.
That's true. I think the important thing, or the not important thing, the thing to look out for, it's like a domino that's falling and it starts a cascade. You need to look at everything and see where the dominoes are falling and where it's starting to cascade, just like the 2008 crash, the housing crash then. If you watch The Big Short, that just shows you the full domino effect. It didn't start with like full-blown panic, right? It was small stuff. And that's what you need to look out for, and that's what we try to cover here.
Yeah,
and there's no dominoes falling. There's the safeguards that were put up after 2008 are here, I think, and are like they're holding up. So who knows? And on the topic, I also don't think there's a recession coming.
Let's just look at what the market is thinking in terms of interest rates. And it moves up a lot. So I'm still thinking June, but there is even a double cut on the table for June, which is good. And so the market is thinking the Fed will cut. So let's just see how the Fed reacts. I think they have to. If they don't, yeah, of course, then we will go into recession. So I think they will. And talking about altcoins, this is when you see Altseason, when the rates are down. So because I talked with Chris a little bit in general, I don't know if you followed. So I spoke a little bit about Altseason, and I think the cycle might be a little bit longer this time around, because one, I don't believe in the 4-year halving cycle. Maybe it worked before because it was such a high percentage, but not anymore. I believe more in the debt refinancing cycle and whatever the Fed is doing, and this is whatever the Fed is doing. If they cut their interest rates enormously, so if we will have, let's say, there's a chance that we have 2% interest rates in 2026. Yeah, of course, alts will do well then. That's just logic. So it's possible that we go into it in the bull market later, just because of what Donald Trump is doing. I think, let's say it was Kamala that was president right now. I'm pretty sure, but it's only guessing, that they would just continue kicking the can down the road, which means printing more and more money. And then it would just follow the usual cycle of global liquidity. But because Trump tries to do it right now, and then going back to this image, rolling back the tariffs, initiate QE, cut the rates, yeah, then we might see the cycle peaking out a little bit later in 2026. So this is a possibility. So it's super difficult to watch this far in the future, especially with all the new policies which we haven't experienced before, but it's possible. And this is it for me, Zirkle. So I know it was maybe a little bit too much macro this time around, but
I say it every week. Bitcoin is trading like BTC 500. It's not my thing, but it is what it is, and we just follow the trends, I guess.
I know it's super difficult about the 10-year yields and everything. So if anyone has a question on that, just put it in chat. Put it if you watch a video later, go into our Discord. We can have a conversation about it. And because I know it's difficult. I had to read about it myself a little bit more as well. So, but yeah, Zirko, you can go to the charts.
Let's go. Yeah. We had a range, we dropped out of it, and I think we're just forming a new range right now. Just something like this, I assume. Let's go a little bit deeper. Last week was we were streaming around here, I think. Saturday, we had our nice drive up. That caught a lot of people off guard. Was I short here? Absolutely. Was my stop here? Absolutely. Was I aiming for here? Absolutely. Did I get stopped out before I hit my original targets? You sure did, like most people, I think. And that's part of the game, right? You just make sure you're preserving capital. Now, the big thing everybody is talking about, and now we need to do an overlay the chart a little bit. So this is your Bitcoin price, the average one. You need to overlay the stock market on it on a new scale. You can see while Bitcoin here is holding up, this is flat and up, what did the stocks do? They took a nosedive. This here went up, didn't happen, it went up and it went down. Potentially actually going for this 3 drive if you use the same scale, but that's not what's happening. So yeah, the big talk is, okay, the stock market, we can quickly look at that as well, by the way. Let's remove this. It's gapped down and it kept going down, and people, well, not people, in general, crypto is very correlated with the stock market. People were expecting a lot of pain on crypto, and it didn't happen. We saw that percentage tweet earlier from Jack, where it shows Bitcoin is up 2.9%, while the rest, like Magnificent 7, is like down 7 or more percent. Complete decoupling of crypto and Bitcoin in general and the stock market. So two reasonable theories, right? Either it is just lagging and the pain is yet to come for crypto. And honestly, I am quite in that camp because I don't remember a day where the stock market like took a nosedive or an actual crash, so to speak. This is full crash territory in 2 days. This was like 10% in 2 days, I believe. Yeah, more than 10% in 2 days. Only happened 4 times in history of a stock market. And Bitcoin didn't follow. So either two possible theories: it lags and it will follow, or once the stock market is done crashing and it's crypto still showing strength, it's going to go berserk and to the moon, because the downwards pressure from outside sources like the stock markets are done or gone or paused. I'm in the camp that this will roll over. We know that GameStop was buying over $1 billion. We know Sailor had another 700 million coming. I think the second that is turned off, we're going to nosedive. And if we go into the charts right now in a bit lower time frame, throw on some levels, we can see we already rejected Monday high over here, and we're slowly trending forward. I think this gives up, and we have a nice double low here on the Monday low. I think that's a very easy first target, and then I think this low is unswept. We have this unswept low. We have this unswept low, although this is already like partially filled with this. This is next, but if it comes here, let's say we just trend down into the futures open on Sunday evening, where the stock market starts trading again in the future markets. If there is pain there, I'm fairly confident this area will not hold. If the stock market didn't crash 10%, then something like this I would acceptable, and I would blind bid over here. And I had blind bids over here from 97.4, I think. I was bidding when we were here, I think, because I did not expect a leg up. I expected a leg down from here, and I was bidding this. But now that the stock market is down 10% in 2 days, not so fairly confident if we go below this range here that would stays up. And let's say crypto is lagging and a big nuke is to come. Where are we targeting then? Now we need to zoom out a little bit, I think. I think I've said this before in the streams last couple of weeks. This is your giant range. An obvious one would be the top of the range, but a little too obvious in my eyes. Most people who want to buy lower will buy here. I think we go sub 65 if we go down from here. Which is, that's another, how much percent is that? A lot of percents. It's another 20% down from here. That's everyone on leverage above X5 or X5 itself, because there's fees, gets liquidated. It's going to be painful if that happens. On the upside, because we're not here to predict the markets. I am just drawing how I would react if we get to levels that I want to see. One scenario that I've been repeating week after week after week is that we flirt above the yearly open and then lose it. Less likely now because the stock market already nuked, but it's still a possibility. 96.4, I think, is the point of control of this entire range. That's where I would make it short with like a 10% stop around 104, 106. So for me to be bullish, above 104 here, and to really like be full, let's go. The bear capitulation has been over 65. Those are the two extreme levels that I'm looking at. Above 104 bullish, and slightly bearish into 65,000. And that's the camp if that Bitcoin is lagging. If Bitcoin is not lagging and it's showing actual strength for a change, which it happens, but very rarely. Zoom in a little bit. Then I think first is above your 84,000 here. Reclaim this little range, and then I think you can target 92 into yearly open, and even above that to 96. That's the upside targets if we do like manage to show strength, and let's say futures open on Sunday, they gap up and we start trending up. Those are my first two targets. I'm still in a hedge short from like 93,500 up here. And I'll just close it break even. It's as simple as that. And I think that's Bitcoin for me. Summary, showing insane strength versus the stock market. And then it's the question, is it lagging or is it leading? And I'm afraid it is, or personally, I think it is lagging.
Okay. Let's do real quick some Ethereum. So I'll go over to my screen. So yeah, Ethereum not doing great. So this is the ETH-BTC charts, and I think the range where you can safely buy, in my opinion, is the range a little bit lower. We bounced a lot of it every cycle, so it was the low as well last cycle, and it might have been, it will maybe be the low this cycle as well. And I think this will align perfectly with all the rest coming up with the QE, lowering interest rates. So let's say it will go here, and then this will be your buy opportunity. I thought this as well here a little bit higher. Unfortunately, I was wrong. But I think
I was wrong as well on Ethereum, like full blown. I thought, oh, this is absolutely the bottom, and nope. It got murdered, and then it was dead, and it got murdered again, and when it was really dead, it got murdered some more.
it's super crazy to me that ETH BTC is at the same price when ETH didn't have any applications on it. So it's awful. ETH BTC is awful. It's looking awful. But for an alt season to be there, Ethereum needs to bottom. You cannot have an alt season with Ethereum not doing anything. Ethereum has to show strength for an alt season to occur. And let's hope it bottoms here. I really hope it does. I think it does. I give it a more percentage chance that it will bottom than not. Let's just see one good thing that's coming out for Ethereum is the Pectra upgrade. I think I had it here. So according to Tim Baiko, mainnet is scheduled for the 30th of April, which is at the end of this month. Then he said a little bit later that they revised it, and now that the Ethereum developers have postponed the Pectra upgrade to May 7. The Pectra upgrade is super important because this will change the Ethereum validators from 32 to something about in the 2000s, which is super important because this will make it more easier for institutions to run
their own
nodes. And I think this is the thing which on Ethereum ETF issuers are waiting to implement staking into their ETFs. So this might be a catalyst for Ethereum and so Altseason to start. But like always, one indicator is not good to look at. You need to look at the whole picture. And I think especially for Altseason, the whole picture is macro as well. And we need lower interest rates. We need QT to be over completely before we even have a chance on Altseason to start. But this might be a good start because I think this is needed for the staking ETFs. It might align with the June rate cuts. Let's see. I don't want to spread false hope, but they might bottom as well.
In the past, because we were both, and I guess still are big Ethereum bulls, but I personally was absolutely completely wrong on my thesis. I thought we would have bottomed out way sooner, and we did not.
But the thing is, real quick, because I also want to talk about this in my altcoin video. I know I promised it for today, but I'm also writing a very big article on it. I can maybe drag it here. So I really want to have all the facts good. So I'm still writing it. It's got a lot of info. I will try to have it out this week. But so to respond on your question, we were wrong, but we got also a little bit baited. Why? Because Altseason is, and one of the best indicators for Altseason is the interest rates, like I always say. And the Fed, and you can either, if you're left or right, your political stance. I think it was very clear that when the Fed here cut 50% basis points was a bit too much and was to re-elect the Democratic Party. And you see it immediately. So we saw here the emergency rate cut of 25 basis points. It broke even the channel, and altcoins, it looked like altcoins were going to outperform and the alt season was starting. Of course, when Trump was elected, they reversed their policy and they're all of a sudden not cutting interest rates again, which is why Bitcoin is going up against altcoins. So I think we just got a little bit baited, and we need to wait again on the next interest rate cuts. And I will talk about this next week. But yeah, the trend is still up. The trend is your friend. So at the moment, it's no time to allocate into alts yet.
No. Let's go over the charts.
Yeah, you want to do Ethereum?
Yeah.
Yeah, go.
Yeah, from 4.2K to 1800, absolutely murder. Not gonna lie, I thought this super capitulation wick was the bottom. I longed here with my stop here, and I got absolutely obliterated. This was the worst trade I had since when was last nuke? This nuke, I think. I always trade with wide stops in case I'm not at my desk that I don't blow my full capital. This was another painful one. Regardless. Let's just look at the higher time frame ranges, right? This was your bottom. I didn't even retest it, unfortunately. Next one, I'm afraid, is down here, which is in the area of 3-digit Ethereum. I've always said over the years, if we get 3-digit Ethereum, I'm just going to go get a second job. I'll flip burgers at McDonald's at night, and that money is going straight into Ethereum. It was a meme when we were trading back here. It's becoming more and more likely again. I don't say it's going to happen. The chances are small, but they're not zero anymore like when we were trading up here, right? People were yelling and shouting for a 10K Ethereum. It might be 1,000 Ethereum, just missing a zero. And this... 40%, absolutely pure pain. If Bitcoin goes like sub 65,000, it's a possibility. But yeah, be ready to buy the capitulation, I would say. Now I'm targeting 1,000. That is super bearish. There are way more levels. There's this level here where we had that weird tree dive pattern. I really remember this. Bitcoin had it as well. I think it was on a different scale though, or a different where was that? This is that tree dive thing where like it nuked, it bounced, and like it found support here with a little sweep, and then it bounced lower, and everybody was like, oh, breakdown here, max short, and it just ripped up. It's kind of what we saw on Ethereum here, kind of the same. But yeah, that's the first level, like 1,500. They're again also on a lower time frame. Bitcoin didn't have the Monday's low swept. Ethereum did. But yeah, below here, that's air. Like you see this leg up here. That's pure air, and that's below this, give or take. I don't think we'll find much support if we go there. And then it's already low 1,600s. So yeah, looking pretty bad. Let's not lie. Let's hope the future market on stocks go up on Sunday evening. I think that's your first catalyst. Because if Bitcoin is lagging and we also have like a nice leg down, alts are gonna get absolutely slaughtered. And then I don't expect. Then I will call it a bear season, and I wouldn't expect the reversal to be a super V reversal. Always sell the first bounce. Actually, should have done that here. Come to think of it, I should print it out and put it on my wall next to me. Sell the first bounce after a capitulation event, because this was a 40% bounce. My norm is to sell like at 15%, but still. Yeah, not good. Solana next?
Yeah, Solana. So the only thing I really wanted to show about this is that Solana will not perform well when there is a recession or when there is a fear of a recession, just because of Solana. Most of their volume comes from meme coins, and of course Pum.fun and every other meme coin will not perform well in a recession. So hence Solana will not perform well into a recession. Here on screen you just see the Solana annual non-meme coin volume, which is super low, which is at the same low as last year. So don't expect Solana to perform well when there are recession fears. So that's the only takeaway I wanted to tell to you guys. However, if there is no recession, if the printer is turned back on, of course, then it will be good for Solana. So super difficult for me to evaluate. I'm in the camp of that the Fed will have to do some emergency rate cutting or QE. But yeah, I think at the moment, be cautious and don't be over allocated into Solana or any other altcoins. So yeah, that is my take, and you can go further.
That's fair.
Zoko.
Absolutely murder, just like Ethereum. We do have a double bottom here with pretty long wicks. Means that there is selling into it, and there's no sell pressure left, and just the small buys pump this up, and that usually gets cleared up. I did enter a short earlier before the stream because, to me, on a lower time frame, this is almost textbook. You have your nuke, you create a top, you sweep that. You test it. We lost it, and I'm short from here. I think 9 something. A little lower. My entry wasn't too great. Just like this, targeting these lows at least. But I honestly, if we're in the camp, Bitcoin is lagging and it's just gonna crash and follow the stock market, you can drag this down sub hundreds. Unfortunately. 100 will be a big level because it's a round number. It's a psychological level. Structure-wise, there's not much here. There was some volume around it, but like lower. So I think it sweeps low 90s, high 80s maybe. And that's how I'm gonna trade it. I'm gonna set my targets like 88. I think I have set super wide, and we'll just see. Based on what happens then. And if I miss the Pico bottom, so be it. It will be probably around stocks open and the futures open when we start the action to see. Okay, and then that's it for Solana. Everything looks bad, and if Bitcoin takes a tumble, it's not going to look bad. It's going to be murder. And please do remember, it's Warren Buffett who said, buy when there's blood on the streets.
I don't think it's Warren Buffett that said it. I think it's Rothschild or something.
Oh, yeah, it's way older. The quote is from like 1800s, no? Like 1800s, early 1900s. Yeah, we definitely had blood on the streets in the stock market on Friday. Not yet on crypto, but be ready. That's all I'm going to say. If we do get here, prices won't trade here for weeks or days. It will be minimum. You'll have your bounce, sell the bounce, and start averaging in on the way down here, and do it with the profits you got from the bounce. That way, if it does drop out and goes even lower, you can just re-enter and do the same with the full amount. Another thing, if you like do live trade this and you happen to be at your desk in a short position on an Omega Giga Nuke, something I'd like to show is, where did we see this? Here. Most people who like try to knife catch, so this was a break. People start to shorts here and here, and they start TPing on the first leg down. If it's a proper nuke, it is never in a single nuke down. It is always in like stages. You have your level where it trades, it breaks down. Your leg one. Most people, when it starts to bottom, will start by here, will TP their short here, and there's always, as good as always, a second leg down. And you can see that here, time here spent over a day forming a new range. It broke down again, but it could have just reversed as easy. Don't close your shorts in the first leg down. Throw your stops break even. TP like, I don't know, 10, 20, whatever profit you want to take, but don't close it completely. Wait for the opportunity for a second leg down, because it never goes down in a straight single nuke and back up. It's always in a leg down, a little consolidation where people close short, so it's buying pressure, and start long, and then they get wiped out on a bigger move. And that's what I want to say. That's it for today.
Great.
Nice long session, I think. Let's look at the price.
Yeah, let's look at the price and the predictions. So I measured it. We are basically the same. So let's just give no points. The only thing what I'm just seeing here, looking at the technicals of the Ishimoku cloud, is let's hope for Bitcoin that we will see the bullish TK cross leading into the cloud and forming an edge-to-edge towards 92K. This is a possibility which might play out in the next month or so. So let's see about that. For my prediction, so I'll start. It's super difficult. So if the stocks crash again, like you said on Monday, then of course Bitcoin will drop even worse. But you never know. So we didn't hear anything yet from the European Union. So if they counter with tariffs as well, or if they implement more harsher measures of trade with US, then of course everything will drop even more. So it's difficult to know. So I'm just going to follow the global liquidity, which is trending upwards a little bit. So this is just what I'm going to do. And I'll just keep my line where it is for next week. So I'm saying up by 2-3%, which is about here, I think, on 86.
Again, this predicting for next Saturday is always hard because I'm good in predicting a trend and riding a little wave of the trend. But to say, price will be this on this exact day, super hard. I'll keep it low. I'll keep it at 80,000. You can move it from 81 to like 80,000. And actually, no, put it way down. Put it at 72.
Possible.
If we tumble down next week and we don't recover immediately, and we take like 65, 72 is like the bounce target of that, I guess, top of that range. So yeah, let's hope I'm wrong, right? For everybody's bags.
All right, guys, we're gonna call it here. As always, thank you very much, Cool. And as always, also a very big thank you to all the people that always like our live stream. So it's always 6 or 7 people that like it. So you guys are my 7 best friends. No, no, thank you very much, guys. I appreciate it a lot. I didn't tell this to you, Cool, before, but next Saturday I might have to cancel because there is a death in my girlfriend's family, and the funeral is next Saturday. So
that sucks. My condolences.
Thanks. Yeah, so or either we cancel or you can do yourself, or we'll keep you guys updated. So yeah, as always, everyone, thank you very much for watching. I hope you enjoyed it. Long episode, but I think packed with a lot of alpha. So see you all, let's say in 2 weeks. Bye, guys.
Bye, guys.